Hi, welcome back. You're here with Zoe Arthurs from Business Basics, and we're just going to move on to part two of the costs and sources of finance tutorial. So this specific section is going to talk about why businesses need to find finance and actually what the sources are likely to be. So in terms of startup costs, obviously you guys should be au fait with that now. We covered it in the first tutorial relating to this particular subject. But for those of you who are joining me now, startup costs are costs that you need to incur within your business before your business actually becomes operational. So it could be through capital injections or savings, but at that point your business isn't actually trading. So they may need finance for a couple of other reasons. It could be for expansion and growth, and that could be for new products that you are diversifying. It's a brand new item that you're hoping to bring to market. It could be that you're looking to enter new or emerging markets with your product. It could be that you just need a new premises, maybe you've outgrown your current premises, or that you may need new vehicles or machinery. So what I want you to do as activity 3, so 1 and 2, as I said, is on the first tutorial relative to costs, but this one is activity 3 and this is relevant to a mind map. So I want you just to think about all the different types of sources of finance or ways that a business can actually gain money. So I've given you an example here. Obviously, one would be perhaps a bank loan. So you may need to access your business. It may not be money that you have readily available. So you may need to put together a business plan and you may need to approach a bank for a bank loan. So just pause the video here, create your mind map. It will help you with revision if you're watching and studying along with a business qualification, but it will also just help you get thinking if you're starting a business and what way you could actually get money from. So join me back in a second. So here's an example of mind map. So there are a couple of options available to you. It could be your own funds. So perhaps you have a couple of thousand stashed away in a bank if that's what your business needs. It could be profits from your business if it's already operating and you're looking at an expansion plan. So perhaps you have retained profits. You could get personal business loans depending on your circumstances. Perhaps there's government grants available. Perhaps you could hire or lease your vehicle or piece of machinery so that it doesn't become obsolete and you don't have to then worry about that asset being sat within your business but it actually not having a net cost value. It could be through issuing shares. Perhaps you're moving your business status or business ownership from a sole trader to a private limited company, and therefore you're able to sell shares to families and friends. Or perhaps you're even aiming higher than that and you're hoping to float on the stock exchange, in which case you'll be able to issue shares through public liability or being for a public limited company, sorry. It could be that perhaps you have assets within your business. So maybe you've got assets that are just sort of sat there, they're not working for you. So perhaps you think about selling those in order to raise cash. Or it could be through venture capital. So I just want you to think about which options are available to you, which are the most reasonable sources, or perhaps actually you're needing to use a combination of each of those in order to raise the finance you need to get your business moving. So there are a couple of options. You've got internal and external sources of finance. So internally is obviously the finance gained with money from your business, so within the business. So as I said, this could be your retained profits, it could be selling of assets, so things your business already owns, or it could be through your own funds. Quite often that's not enough for a business, particularly if you have quite elaborate expansion plans. So you may need to get finance from outside the business, so external sources of finance. And these would be things like your loans, your government grants, your hiring and your leasing contracts, venture capital, or if you're going to issue shares, depending on what your ownership status is of your business. So there's a couple of options there for you. It's a really short tutorial, but what it is about is just making sure that you know where you can access those funds. Now, in terms of your government funds, the easiest way is just to tap into HMRC. You could also have a look on sources of advice, which is also covered in previous tutorials. So maybe the Citizens Advice Bureau would be able to help you, or the Financial Conduct Authority may also be able to show you in their news section what's happening within the financial markets and the regulation authorities that are going to be relevant to people that are hopefully going to loan you money. So thanks for watching. Check out my other tutorials and hit like if you're enjoying them. Speak to you soon. Bye.